Yo, what is good, YouTube? We're back with another video. If you're not in the free Discord, go join it. It is the first link down below. Today's video is going to be episode 6 or 7, I think, of the beginner ICT Trader Den series that I've been uploading. If you guys haven't started it, go watch it. You can find it on my YouTube. It's in the playlist section. Beginner Trading Den. So the video we're going to be making today is going to be how to find the draw and liquidity. Right, we're not going to go over entries or anything. We're just going to be looking at how to find the intraday draw and liquidity, so you guys can start to understand, okay, is the market going to be going up? Is it going to be going down? Right, that's all this is. So right here I have a little depiction, right, just a little idea of what we should be looking for. Right, so how do I find the draw and liquidity? It starts from looking at the daily and the weekly chart. Right, I look at the daily and weekly to understand, do we have a CRT in play? What's the overall order flow for the week? And things like that, right? Are we delivering from a key level? Just very simple things. Those are the three main things that I look for: CRT, order flow, and higher time frame key levels, which would be an order block, fair value gap, high or low, right? So we have a little depiction right here of what a chart could look like. Okay, so right here, let's say that the overall higher time frame, the daily for the week, has been showing bullish order flow, and we have this coming into New York session, right? We can say that this is London. Okay, so what does London do, right? Asia accumulates, and right here during London, we see that we can we soup this low, right? But the other thing I want to be looking for is, have we hit a higher time frame key level, like the 1 hour or the 4 hour chart? Right, so right here, I'd want to see this low that was created during London tap into a higher time frame key level, like a fair value gap. Usually I just look for a fair value gap pretty much. Right, so let's say this London low swept Asia into a higher time frame key level and then showed displacement on the lower time frame, right? So what I'm looking for this low being created is not a 5-minute, a 15-minute fair value gap. It's a 1 hour or a 4 hour fair value gap. And then the lower time frame, this leg right here, I can go on the lower time frame, like the 15-minute or the 5-minute, depending on time frame alignment, right? If we hit a 4 hour fair value gap on this low, I'll look at the 15. If we hit a 1 hour fair value gap on this low, I'll look at the 5-minute. Okay, so then this leg, I go to the lower time frame and look for the displacement, change in delivery, and then right here we can say this is New York session. So New York comes down, taps into a London 15-minute fair value gap, and then I go down to another lower time frame, like the 1 minute. Right here I find my 1 minute entry, and then I target the overall higher time frame draw and liquidity. Right? Very simple. I know that was a lot of words, I guess, but it's a very simple, straightforward concept that I use to find the draw and liquidity. Right? So we can just hop into the charts and go to the daily. Right? So we can go over, if you guys were watching the charts this week, we did have some very choppy lower time frame price action, but the draw and liquidity for each day was pretty it was pretty obvious, right? So we can go over we'll go over a couple days this week, and then we can get into the larger expansion like these 2 days, right? So, and then we'll come over here so I can show you guys some bearish examples. Okay, so I don't know what we can do, like Monday, Wednesday, I don't know. We'll just go into the charts, right? So what has the higher time frame, right? What has the weekly and the daily order flow been? It's been bullish, right? We've just been going up, 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 up after taking all these lows and hitting this weekly order block, right? Sweep this low, expansion, these down close candles can now be considered order block, and taking all these lows. And what's another thing that happened, right? Right here is a weekly CRT that happened, okay? And what happened at this CRT? We displaced through it on the daily, okay? So, order flow, bullish, CRT, complete. So now what am I looking for? I'm going to be looking for the daily to show me order flow is continuing to be bullish. So I come into this week, I'm like, okay, higher time frame is bullish, so I'd rather long than short. So if a long opportunity presents itself, I'd be like, okay, it's my time, right? So let's go back, because Thursday and Friday were pretty ugly. So let's go back here. Okay, so what happens right here on Monday, right? Right here's a daily fair value gap and an old low right here. So let's go to the 1 hour. Okay. So what happens here? All right, right here we have, is that previous day low? It's Thursday's low, so sometime last week, right? But what happens, right? So we sweep this low out. Also, we create equal lows right there, right? So we have equal lows. What happens here? Taps into a bearish fair value gap, gets displacement lower. And what do we tap into, right? 4-hour fair value gap. Did we tap into this? Yeah, we did. Okay, so we tap into this lower 4-hour fair value gap right there. And we have this little 1-hour fair value gap, all right? So, like I said in the depiction, right? And what time did this happen? 4 a.m., which is what? London session. Okay, so fair value gap, and we have lows right here that got swept. So 1-hour fair value gap, what do I go down to? The 5-minute, right? And once again, I'm not going to be going into entries, but look at what happens, right? Taps into it. We also sweep this swing low right there. So what becomes the change in delivery? This right here, right? So this comes down. We don't take this low. Expansion higher, comes down again to tap it. Then we get another expansion with a fair value gap right here, right? Yeah, it closes below, but then it reclaims it. We chop around a little bit, and what happens right here at 9:30, right? Well, not right before open, right? Sweeps this low, expansion higher, right? So, right there, what do we have all throughout here? Relative equal highs. And then we also have this high all the way up here, right? So you guys see how I got my very simple bias just from this fair value gap. Why not this one? Well, this one broke highs, right? We probably aren't going to come all the way down here, right? I mean, that's another 160 point move. So this one right here is good enough, right? Because it's also this big 4-hour fair value gap, right? But you guys see we expand higher. Okay, now that was Monday's draw on liquidity. Sorry, I couldn't think of what I was trying to say. Right now we take this high, right? So what do I look for after that? Well, now I want to see, are we going to break and displace above this high? And if we do, this should be the fair value gap that gets respected, right? But what happens in the overnight session? We break below it. And why this one? Why not the lower one? Well, this upper one is the one that broke above these highs and took this high. So I'd want to see this one get respected, right? I'd want to see this get respected and then an expansion away from this one if we are going to remain bullish, right? But what happens? We close below it, okay? And then if we want to go down to the 15, what happens down here? Well, I can say, okay, well, we have this 15-minute, and if this one gets ran through, then obviously we're going to keep going lower. And we also have this low right here, okay? So this one was disrespected, right? Where's 9:30? Right here, right? So what happens here? We sweep this low, but there's no displacement, so hands off, right? We continue lower, continue lower. Also, what happens up here? We respect bearish PD arrays, right? We respect this bearish fair value gap and continue lower. But what happens right here? We sweep this low, right? Sweep this low and run bearish fair value gaps with bullish ones, right? So now we have a BPR. Okay, that is telling me, okay, now the draw on liquidity can become this high, right? And what do we have here? Relative equal highs, right? Literally perfect equal highs right there with low resistance liquidity. I did not go over that yet, so I'll probably have to make a video on it, right? But what happens from here? Taps into this BPR, expansion higher, right? My bias is bullish. Why? Because we ran that bearish 15-minute fair value gap with bullish fair value gaps, right? That's it. What happens here? Comes down, sweeps this low, expansion higher, all right? Also, the other thing you can do is, what PD array is this? 15-minute. I'd consider this the change in delivery up here. Why this all the way up here, not these two down closes? It's because we didn't take out a swing low with these down closes, right? But right here, we close above it, respects it, and we also even come down right here and respect it. Then what happens? Order blocks. Expansion higher. What's here? A fair value gap that what? Broke above a high. Boom, expansion higher, right? Then we run these equal highs, and we actually create equal highs up here, so that's just unlucky, right? Can't do anything about that. But you guys see how I flit, like I said, if this gets, where is it? Where is it? Oh, that was a 4-hour fair value gap right here. I didn't realize that. That's my bad. If this gets disrespected, I would have flipped bearish. But since the 15-minute respected this and swept this low and then ran these fair value gaps, my bias goes back to bullish, right? You guys saw how you could have framed a trade from that, right? So, as you guys saw, right there was 2 days where you could have caught or had a bias that was correct, right? Now, I didn't go over Tuesday, but look at this price action. Right here is 930. Look at that. I mean, you can't really do much about that, right? We literally went nowhere. Right here is one. I mean, the overall range was 175 points for New York session. You literally can't do anything about that. And if we go down to the one, where is it? Right here. Look at this. I mean, look at that. Dude, that's ugly. All right. But you guys saw those 2 days out of this choppy week that we had this previous week. It is what it is, right? But right here, we had 2 very nice expansions, right? So what happens whenever we have like these small candles? What is that? It's consolidation, right? So what happens after consolidation? Expansions, right? So when does the expansion happen? Nobody truly knows, but after consolidation comes expansion, right? So if we go down to the 1 hour, right here is where it started. All right, we had a new week, right? New week opens up, massive new day opening or new week opening gap, right here, new week opening gap. And right here is 3 a.m. I'm pretty sure this was, well, this was some kind of news. I can't remember if this was the day that Trump said something about tariffs. I can't remember exactly what this was, but right here, okay? So what happens? What is this? Fair value gap, right? Just a monster fair value gap. What can you do with this actually? You can mark out the 0.5, right? Or you can mark out the 0.25, the 0.75, right? But right here is the midpoint of this fair value gap. We get very, very close to it, right? So a big 1 hour fair value gap. What is it here? 15-minute. Like you can keep going down to time frames and making it smaller, right? So now we have a nice 5-minute fair value gap right there, right? Just making it smaller. Okay, so what happens right here? Oops, thought I was pressing my shift button, right? 1 hour fair value gap, 5-minute fair value gap, 15-minute fair value gap, right? But if you're going to use that 1 hour time frame, what do you want to look for? The 5-minute, okay? Now, what happens here? We get what? Let's get rid of this because you guys know it's a 1 hour imbalance. What happens here? We disrespect this fair value gap. Out of these, like, yeah, we do have a tiny one up here and then this one. Out of either of these, which one do I want to see respected? It's this one. Why? It's because it's the one that broke the low, right? It's this simple. Whatever one broke the low, I want to see be respected, right? Now let's go to the 15. Is there anything on the 15? Oh, take a look. We take this 15-minute candle's low. CRT. Boom. Right? Trade is framed, right? We have a trade that can be framed from this. CRT on the 15-minute, higher time frame key level. Mwah. Beautiful, right? So, what can we look at? Oh, look. We have a BPR. All right? You don't need a change in delivery if you have a BPR. Right? If we have a obvious draw on liquidity, we have a key level, you can look for a BPR. Oh, I didn't even go over a BPR. A BPR is a fair value invert or sorry, stumbling over my words here, is in this example, it's a bearish fair value gap that gets disrespected with a bullish fair value gap. And then vice versa. If we have this bullish fair value gap and then break it with a bearish fair value gap, it's a bearish BPR, right? That's all it is. So right here we have a bullish BPR. Yeah, we do chop around for quite a while, but this low shouldn't be disrespected. All right, we have a 15-minute CRT. We have an obvious 15-minute CRT. We have a higher time frame draw on liquidity up here. Why? Because of the 1 hour fair value gap. I didn't go over internal to external yet, but fair value gap to an old high. Right? Trades framed. Higher time frame key level. Check. CRT. Check. Order flow. Check. Boom. Right there. BPR. We don't need the change in delivery. Okay? And then you guys see at market close, we actually do end up running the high. So you would have been in this quite a while. But let's just check the risk, right? Even to this high, it's almost the 2R. So just go a little above it. Boom, 2R secured. All the way up here, 5R. All right? So you guys see how you can frame a trade just from that, right? Bullish order flow, bullish higher time frame key level, and a bullish CRT. When all those three things align, boom, 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 boom. Put the risk on, bro. All right. Now, going into the next one, and then after this, we'll do a couple bearish examples, just so you guys can understand both sides of it, right? Now, coming into Tuesday, right? What happened? Monday expansion, holding what? Bullish PD arrays. What's happening? Disrespecting bearish PD arrays. Okay? Now, fair value gap here. Why are our eyes on this? It's because it's the only bullish PD array within this price action, right? We take this high, return back into it, then we start the expansion during 5 a.m., right? Now, as you guys notice, we do not tap into a 1 hour fair value gap during New York. But what did we tap into over here? Higher time frame key level. All right? Also, we had this bullish candle right here. Okay? You can also frame a trade from that, thinking that we are going to go to the high. Right? Now, what do you do if we don't tap into a 1 hour? Right? Oh, I'm on MNQ. I don't think there's this volume imbalance right here. And I'm pretty sure we might have formed an SMT on this day. Yes. Right? Now, here's another way you can frame. Wait, hold on. Before I get into that, why are we bullish? Once again, higher time frame order flow, bullish. 1 hour fair value gap, bullish, being respected. Expansion during 5 a.m. right here, bullish, right? Everything's aligning to be bullish. Okay? Now what happens? We form this lower time frame SMT. Right? If we go down to the 5 minute, you guys can see it's this 5 minute swing low. Takes it on the NQ, does not take it on the ES. Can I go down to the one? Yes, I can. Right? So right here it comes even more obvious. Creates the SMT. What happens right here? Change in delivery, right? Closes above it. We have a breaker. I didn't go over breakers, but I can later. What's this up here? A high. What's this right here? Fair value gap that breaks the high. Right? Our higher time frame draw is obviously higher. You don't have to be scared longing all the way up here. Yes, it might feel scary, right? You're longing up here after this move. But everything is aligning to be bullish. So just manage your risk. Right? It's as simple as that. Right? And you guys saw how I framed what? My bias to be bullish from this. Right? This 1 hour fair value gap. Higher time frame order flow. Bullish. Everything is just aligning to be bullish. Right? So, yeah. That is all the bullish examples I think I'm going to go over. And this video is already 20 minutes. Alright, and I haven't even stopped talking. I haven't even gotten a drink. So let me slug a little Ghost. I was really, really tired. Like, I don't drink energy drinks that much anymore. I was so tired this morning. I had to snag one. It tastes so good. All right. Oh, 20 minutes of sitting here. I need to hit the gym. All right. All right. We can do these three. Why not? All right. These three just because they catch my eye. And I haven't even went back and looked at any of this price action. So, like, I'm seeing this for the first time since that day. All right. So all those days that I just did and these coming up, I framed on the whim, right? Like, that's how simple finding a draw on liquidity is. You look at a chart and you can literally tell where it wants to go. It's just finding a good entry with good risk that is a little more challenging, managing your risk. So if you take a loss, you can re-enter to target the draw on liquidity if you were wrong for the time being, right? You can be wrong for the time being, but still right overall, all right? Now, these 3 days, what has order flow been? Bearish, right? Bearish. What do we have right here? A 1 hour fair value gap, or daily fair value gap. Okay. Now, what happens here at 10 a.m.? Oh, low resistance liquidity right here, right? Failure swings. But what can we even put this more down to? A 4 hour fair value gap, right? Just making it smaller, right? What happens here? Well, we take the candle's high, right? This closed as a full bullish candle at one point. We take the high of it. What can we go down to? We can go down to the 15. Right? What happens here? Change in delivery, right? Now, unfortunately, this day, it looks like we kind of just went straight down. So let's see if we can go to the 1 hour. Ooh, we can. Okay, so, right, just making it, right? Order flow's bearish. So you can keep going down in time frames to try to find a better entry. So we found a 1 hour fair value gap. Oh my gosh, this literally just went straight down. Okay, well, nothing you can do about that. That's tough. All right, well, what about the 1 minute? I can't go back that far here. All right, well, that's unfortunate. Can't find an entry on this day. All right, but you guys saw how I framed the draw on liquidity, right? And this actually happened at close. So what happened at open? We kind of just... This is also another good way whenever we're not really displacing higher. Like, yeah, we do right here, but we kind of just fill in this entire thing and then slowly grind higher. That's another way you can tell that, hey, we're not really making a move higher. Now, sometimes these days we'll just keep grinding and grinding and you'll get wrecked, right? So you have to have the confirmation, right? But yeah, there's not really a good entry. Now, what could you have done, right? You could have targeted, right? You could have been bearish, or yeah, you could have had a higher time frame bearish draw, but you also could have targeted this fair value gap that had this high, right? Let's see if we had a SMT or something. No, it doesn't look like we had an SMT. Okay, so no SMT, but we do take this low and then close above this candle. So let's see if we maybe like could have found an entry to target that high, right? Right here's a 15-minute fair value gap. All right, so we sweep this low, we sweep this low, and then expand higher. 10 a.m. taps into it. Can I could go to 3, I guess. 3 minute, ooh, sweeps this low into that 15-minute fair value gap. Inverse, boom, close above, holds it, goes to the draw on liquidity, right? For the intraday draw on liquidity. And then you can flip bearish, right? So you guys see how you can maneuver your way around if for the time being you want to be bullish to have a bearish overall draw on liquidity, right? So obviously our higher time frame draw and order flow is bearish, but for this day and the time being, you can be bullish, right? We had that 15-minute fair value gap that broke a high. we swept this low and this other low from over here. We have a high inside of a higher time frame key level, right? And right here we tap into this 15-minute fair value gap, and we also sweep this low, right? And then we inverse the 3-minute. Okay, boom. Like, you guys just, like, you can also do that, right? Now, after this huge displacement that happened at close, what can we be for the rest of the week? Well, huge fair value gap right here, right? I'm not going to mark that off, actually, because that's just annoying. All right, now, right here, boom, a little fair value gap. I wonder if we had an SMT with that high right there. Ooh, yeah, we did. Okay, so we have an SMT with this high right here. Okay, so this high no longer has to be taken. We have a fair value gap, and we have equal lows, right? Higher time frame order flow, bearish. Higher time frame key level, check. Even an SMT, check. Right here, fair value gap. Right here is the SMT. Boom. Right here is the draw on liquidity, right? Right here is that 1 hour fair value gap, and we also sweep this high. Now, can we find an entry? Oh, right there, boom. 15-minute fair value gap, 15-minute high. I can't go down to the 1 minute, so we'll have to go to the 3. Can I go to the 2? Because that could, okay, cool. It's a little better. All right, now, right here, 15-minute fair value gap, 15-minute swing high. Right here, change in delivery. Right? These two up closes take out a swing high, closes below, holds the change, goes to sell side. Boom. Right? Draw on liquidity. Boom. Bearish. Boom. Right? So you guys saw another example. All framed. Oh, we also had that 4 hour fair value gap. Right? So another day. Easy draw on liquidity to find. All right? Now, coming into the next day, what are we? Bearish. Order flow is bearish. What do we have right here? 1 hour fair value gap. Go down to the 15. Oh, look. We can make it even smaller. 15-minute fair value gap. Oh, very, very nice. Right here. Takes out a swing high on the 15 at 9 a.m. Go down to the 1. All right. Right there. Takes out the swing high. What's this? Oh, that's 8:30, right? Right there. And we even tap into this little 1 minute. What's this? Change in delivery. Oops, didn't mean to mark it off as that. Negative change in delivery. You could target this internal low. All right. Now, if you, let's say that you were a little nervous to take this because it wasn't open yet, right? Right here is open. Big wick, okay? What do? Right? Well, you could, right? Right here, fair value gap, change in delivery. Everything looks really good. I'm on the 3 minute too. I really wish I could go down to the 1 minute. Let's go down to the 2. All right. Well, right here is the change in delivery on the 2. Okay. Now, what happens right here? These two up closes tap that change in delivery. All right. Now, these can be considered order blocks now. Right? But let's say you're still nervous because we already took these lows right here. So let's say I'm nervous, right? Right here, we close below it, but don't tap it. Let's say you want the perfect entry. It has to tap it, right? We take these lows, and then you're like, oh, now I'm nervous because we took lows and we're coming back up. Okay, that's fine. Okay, so what can we do? Well, let's see if we form an SMT. Why does this look so weird? Okay, whatever. I guess we can't go back or look for an SMT. Okay, well, what happens right here? Bearish fair value gap gets ran with what? A bullish fair value gap gets ran with what? A bearish one. Okay, cool. Boom. Enter. Okay, I'm still a little nervous. This can now be considered an order block. Why? Because we traded into these two up closes that are already an order block. We close below it. Oh, look, we even have a fair value gap. Right, there's tons of entries, bro. Right, 30-minute video. 30-minute video. I'm done. Right, I'm quitting. I showed you guys a ton of examples here, and I didn't even. I guess I did stumble over my words a few times, but like, I gave you what, 1, 2 examples for this week, 3, 4, 5, 6, 7 examples on the whim. I just looked at the chart and saw, hey, bearish order flow. Okay, let's look for bearish PD arrays, higher time frame key levels. Okay, cool. Boom, check. Let's short. Oh, look, this day, no signs of being bearish, but we can trade up into higher time frame key level that we want to be bearish from. Okay, cool. Boom. And then guess what? We flip bearish. So what can we be for the next 2 days? Bearish. All right. I'm out of here, bro. I got to go hit the gym, and I'm hungry. So we're going to hit the gym, go on a run, eat some food, drink some cocoa water, maybe get in the pool even though it's 50 degrees outside. I'm out. Bye.